You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time to rock out once again with everyone's favorite. Hopefully it's your favorite. It's my favorite, if it's not your favorite, bi-weekly source for all things options related. Yep, it's time for the old OB, time for the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. You guys know how to get us by now. Lots of good stuff, lots of good places to get us. Our website, our mobile app, the places for the deep dives. You just want to subscribe, set it and forget it. I know it's what a lot of you like to do. iTunes, tune in. I don't really recommend iTunes because the app is terrible, but a lot of you like to get it anyway. Google Podcasts. I like Pocket Cast myself, so you want to go that road. It works across all devices, Windows, PCs. It works on Android. It works on iOS. It works on all the above. I like it. And a little sync between them, which is nice. I go that route, but however you like to go, including joining us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. Either way, interesting stuff. Nonetheless, hope you guys like earnings. We're going to get into a lot of them on the show today. It's earnings Palooza day here on the old option block. And to help us talk about all this good earnings stuff, let's go around the horn. Let's actually start a little bit farther afield. Usually we go, actually a little bit closer, I should say. We usually go all the way out to the coastline of Maine, where we are joined by the Rock Lobster. Before we do that, we're going to go one state over to New Hampshire, where we're joined by our old buddy, Mr. Matt Ambertson, the founder and principal over there at Options Research and Technology Services. You may know him from his regular appearances on our Advisors Option Show, making his return here on the old Option Block program. Mr. Matt, how you doing?
Great to be here with my old friend Andrew from the floor, Mike, and you. And I'm a Pocket Cast fan as well, Mark.
There you go. 2 votes. See, the gentlemen in the room who know, they know Pocket Cast. You know, that's the way we like to go. Actually, you're not in New Hampshire. You're in New York, right?
I'm in New York. I took the luxury coach down here, and I have a few meetings on NASDAQ TV tomorrow, and then jamming back up for a nice weekend in beautiful New Hampshire, right next to Andrew, where the striped bass are scared.
You seen our old friend Jill on the NASDAQ market site, Jill Malandrino?
Yes, I am.
Remember, don't pull a Chris and terrify her. You got to be nice and warm and opening, receptive.
Yeah, will do.
Go listen to our Advisors Option Show, listeners. You can hear what I'm talking about. And since he did chime in there, we also are joined, if we go back up the coast, all the way to Maine. He's dragged himself out of the water and his regular routine of clam digging and lobster fishing to join us here on the old program, Mr. Rock Lobster Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show, sir.
Well, it is good to be here. I'm glad. You know what, Matt and I just realized we go back a while now, almost like 24 years or 5 years or something. So when we were younger and not married and stuff. Although I'm not complaining about being married. It was just, I've known him since before I was. Way back when. Since
the good old days, as opposed to the dark days now of clam digging and ice rinking and all the other things you're doing.
Like the labor.
Yes,
labor.
Manual labor. The dark days of manual labor. And last but not least, joining us from a lot closer to home, from that quiet, sleepy hamlet known as St. Charles, Illinois, where they take credit for everything, we are joined by Uncle Mike Tusaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show. What are you guys taking credit for today?
Just being part of the option block. We're just happy to be here.
And we're happy to get to it. So let's do it. Without further ado, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. You know the drill, the portion of the show where we break down what's moving, what's rocking, what's rolling in today's activity. A bit of a weird one. Markets kind of spread kind of all over the place. S&P off kind of fractionally 0.3%. The Dow actually up nearly 0.5% on the day, and the tech-heavy NASDAQ getting schlemucked, I think is the technical term. They're off nearly 1.5%. Of course, the tech side of the space getting just walloped by all things Facebook. We'll get to that. We'll get to all the earnings stuff in a little bit here, because we're going to get into it hot and heavy here on the show, listeners. Don't worry. Facebook, Amazon, Chipotle, Intel, Starbucks, all that good stuff, all popping off. We'll get to all of it in a little bit. But first, let's talk about what was catching our eye in today's intra-market, intraday activity before we get into all the good stuff. Mr. Matt, as our guest, we'll start with you. What was catching your eye today, sir, before we dive into the massacre that was Facebook and all else?
Well, it's tough to talk about anything else. So I was completely focused on my friend Zuckerberg over at Facebook today, Mark.
All right. Well, if you're not going to play, no, I'm just kidding. We'll talk about all that stuff. We got a lot of data on all things Facebook. We'll get to the Matt and his team putting out some good data for us. Mr. Mr. Rock Lobster. Kind of a weird day. VIX actually kind of unched after all this. We talked about this a lot. The indices play into their own bases. You have like the Russell, which has kind of been rallying historically because they're small cap, immune to a lot of the big trade war wins. S&P kind of fluctuating because of the trade wars. Tech-heavy NASDAQ kind of all over the place. Dow kind of marching to the beat of its own drummer. So it's kind of a pick your poison land out there in terms of which index you're watching, exactly what kind of day you're having. And VIX kind of sees all that and says, today. So that means, of course, we're back in zone -6, right, for VIX?
Exactly. Well, you know what? I think like we've discussed before, for you, all VIX zones are -6.
It's just the coolest zone. Everyone knows that's the negative zone you want to be in with VIX, the negative zone.
Like all restaurants are Taco Bell in the future. What I'm noticing is stubbornly, especially for a couple of my shorter term positions that haven't made me any money, that's for sure. Is the market's not moving a bunch, but VIX is stuck in zone 1. And I think, the more I look at it, I like last year with like that 9 handle and 10 handle and 11 handle. To me, that's like all. Unless something drastically happens relatively soon, that's all just that whole period of volatility. You should take it, put it in the waste bin, and don't take it out again for another 10 years, because that vol that low is just, it's a rare commodity. So I think that's part of the thing. There's pretty healthy future premium, and I think, to be honest, from a VIX point of view, we stormed up 1% yesterday on the trade news. So I mean, how low is VIX going to go when we just gap up 1% again? I mean, the NASDAQ was up 1.5% yesterday into the tech, into earnings. So there's definitely some opportunity there. But for VIX, like the 12 handle, I think if we smell 11, I will be hugely surprised. The only thing really is, if that GDP number looks really good, like everybody's being about a 4% number, which I don't think we've seen in, I can't even remember the last time we have had a 4% number. So I think, but that's enough to hold up vol. Amazon, we'll get to Amazon, I guess, in a second. But from a vol point of view, the future premium is healthy. VXX hasn't gone anywhere in a week. And or any of the vol products, really. They've gyrated, but really haven't done anything. So we're now in the part of the cycle where it's hard for those products to hold this premium. So, the next 2 weeks and in should give us something, which would be great. But as far as right now goes, vol product space has been pretty dead for, I think, 3 weeks as far as action goes. We had that last little pop about 3 weeks ago, and since then, everything has been dead. So I don't see any kind of action changing until we actually see VIX break a new lower number and stay there. So 1230 is pretty darn low. But if you want vol products to move, you need VIX to move a little at this point to get things to kick in. So it's a little spectatory at this point, I have to admit.
Yeah, it has that feel to it. A little bit of a kind of a watching and seeing market out there. But Uncle Mike, what caught your eye in today's weirdness before we get into all the earnings madness?
Right, and I'll purposely not talk about Facebook and Amazon and all the other things for the time being, just because, we're going out on a limb and guessing that we will be talking about those a little bit more. Some other things that did catch my eye in today's marketplace, industrials in general. Dow, of course, was up quite a bit today. So with the Dow doing what it's doing, industrials are obviously in a pretty nice spot right now. So the industrials were definitely something with which to take a look at. It's up XLI, for example, up 58 cents, 0.77 on the day. Energy up over 1% on the day. It's always exciting when such a thing happens for my clients who are in our XLE position. That, of course, being the buy and hold position, which there is a place for buy and hold at times, and always exciting when that does well. But with it, I think that with today's action, with what's going on, it's going to be interesting to see where we're at with a lot of things in the coming days. I think that Amazon just put their news out, and so we'll see how we'll obviously talk about that. But I think that the reaction to this, we're at a pretty key point right now in the S&P 500 in general, in that we are roughly 30 points away, if I'm not mistaken, roughly 35 points away from an all-time high in the S&P 500, and that's 1 day worth of movement. And so of the FANGs, we've had Google earlier this week, did very well. Of course, we had Facebook, did not do so hot, which we'll talk about. And then so far, it looks like Amazon is doing pretty well. And it's going to be interesting to see how the market overall will react to this being this close to all-time highs, because if we do break through the all-time highs, then there's obviously no resistance past it, but all-time highs can also serve as a point of resistance as well. So that's pretty much my take on what we have in the marketplace today. So come on, Mark, let us talk about Facebook.
All right. I don't know if you guys know, but something happened in Facebook today. They decided to shut the whole thing down. No, but it seemed like it, judging from what you'd see with the stock price taking just a drubbing, setting all sorts of records that you don't want to set. It was threatening at one point. Our buddy Mr. Schwartz, the Schwartzatron, the flow master, tweeting out that they were on pace for about 2 million contract record. It doesn't look like they reached that. They got about 1.7, flirting with 1.8 million contracts. Still a redonkulous amount of paper. However you want to cut it, they do about 260, about 250,000 contracts a day. So doing well more than that today in terms of volume. But yeah, if you haven't seen it, I don't know how you missed it. But of course, they didn't exactly set the world on fire. Even though the numbers they reported were pretty strong, it's all about the guidance, and they're talking about getting down to single. They said, we quote, "We expect our revenue growth rates to decline by high single-digit percentages from prior quarters sequentially in both Q3 and Q4." And what did that mean? That meant look out below. Just that one sentence alone, just annihilating more market cap than pretty much any other event. Single of not in terms of broad index sell-off, but in terms of like earnings events and things, single name events than any other event in market history. Over 114 billion in market cap wiped away today. So that's a dubious record in and of itself. Number 2 actually out there, Intel, September 22nd of 2000. I was out there for that. I was still trading Intel options at the time. If I recall, that's the same day. I think it was. I'll have to check my dates. There were a couple of crazy days out there in Intel back then, but it was so nuts at the time that we come in the morning. You know, things are going to be popping off when other market makers who are bored are just standing around your pit just watching, like it's like a zoo attraction or something, just waiting for the madness to ensue. And sure enough, it did. Once the bell rang, every walk-in broker was lined up, and it was madness. Guess what they wanted to do? They all wanted to buy puts. Funny how that works. But yeah, Microsoft, April 3rd, 2000. Apple, January 24th of 2013, number 4 with 59 billion wipeout. And number 5 was ExxonMobil, October 15th, 2008, $52 billion wipeout. It's been fascinating to watch this. Matt, you guys over there have really been leading the charge. I've been plugging you guys all the time because you guys have been putting great posts up on the Options Insider, our earnings, move reports. You can check them out there, listeners, as well as, of course, on the ORATS blog. You guys do a great job. You do yeoman's work of really breaking down what the heck is the market pricing in, not just this quarter, but previous quarters and everything else. Walk us through what you were seeing out there going into the announcement, and then obviously what you ended up seeing afterwards.
Well, thanks, Mark. You actually pushed me to get this report going, and then so we put it up on.
Okay, if you want me to take credit, I will. If you really want me to.
Yeah, it's all you. What I saw was that the option market was taken by surprise on this one. We have a way that we isolate the straddles, and what you need to do is look at what the straddles are going to be worth after the earnings are announced. So we have a way to what we think get a very good number and about what the option market is expecting for the announcement day. And that was an expected move of $9.80 for Facebook. And the past expectations were about $11.50, so well below what was priced well below what was been expected in the past. And of course, we saw what happened, down $42. Another interesting thing is that its actual moves and related to this stock price expected about $9 this particular earnings. So what I take away from this is the option traders did not expect this coming, and there was actually a little bit of bullish activity that we saw. So it was a total miss from the options market, which often, as you know, and I know, and Andrew knows, sometimes there's leakage, but this time there was none, Mark.
No leakage at all. Speaking of leakage, who's drinking a beverage over there? You're driving me crazy. So drinking a beverage or rubbing something on your chin, we got to get you muted so we could hear all the goodness that's going on here on the old show. Speaking of goodness, we asked you guys after this annihilation of all things Facebook. We're assuming it opens up down about 20%, and that's kind of what it did. What is your next Facebook options trade going to be? You're going to be buying calls or call spreads. You're going to be buying puts or put spreads. Going to sell puts or put spreads. Or you're going to sell calls or call spreads. Or chime in with your other thoughts. A bunch of people chiming in, selling all the money puts, probably staying away. Someone chiming in with a picture of Mark Zuckerberg on the cell phone is saying he's paging the Fed for bailouts. Hit one. That was a pretty funny one. So a lot of great riffs and memes you guys have been sending in on this one. The votes coming fast and heavy. This is only a quick flash poll, so you got to get in there. If you listen to the podcast, you already missed it, listeners. I'll reveal the results in a minute. Mr. Rock Lobster, what do you think our audience is voting for, A? And then B, what were your crazies in the pit chat? What were they up to today in Facebook?
I think the audience is going to buy call spreads, and we were actually looking to sell premium in different ways, butterflies, iron condors, put spreads, looking for like upside flies and stuff like that. That's what we were looking for. I think people are going to just want to buy call spreads and look for a little bounce in it. That's what it feels like. So that's I guess the short thing. And for the most part, the trades we looked at on Facebook today did okay. We started the chat right around the opening, right around 10 o'clock Eastern time, and there was a lot of opportunity. The vol is down substantially from there when we looked. So because Facebook opened today and all the vol was up from the close. So usually that's a pretty good, you want to try to sell some vol into that. It's rare that happens. And, stocks don't normally bounce back from down 20% on a miss like that. So you obviously have to be able to manage it if, you need to manage some short gamma if things are ripping around a little bit. But the ideas we had, I think did okay as far as today goes. Of course, if you want the exact ideas and stuff like that, you got to be part of our chat room. So if you're not, you lose.
That is a rare occurrence, though, to have the vol actually end up on the day. Usually it hits that peak, some point in the day when the max pain, everything's kind of just freaked out. Not the max pain option-wise, this is max pain of the audience, the max pain of the underlying movement, and then people just tap out. They can't. That's the max point, and then the vol usually implodes from there. When it doesn't, like this, that's kind of an interesting sign in and of itself. Maybe we're in for choppier waters ahead. Would you concur, sir?
Yeah, I mean, definitely didn't. It opened, and I don't think it had more than a 4 or 5 point range from the opening, from what I could look at. And volatility, I remember trading probably in the high 30s to low 40s as all that vol came in toward the end of the, as the day went on, because it just, now all of a sudden everybody's trying to revalue it. I don't even think Facebook is that expensive of a stock anymore now that they knocked 20% off of it. Just like if you want to do some good old fundamentally metricy stuff, that it's growing and it's still growing. It's just it wasn't growing at a 220 stock, just $175 stock. So I think and the volatility is still pretty juicy for Facebook. So I think there's more. I don't think that is the end of the juice selling opportunities in the name at all. So yeah, if you look at just the daily vol chart, vol started up on the day and was down pretty substantially all through the day. So some good opportunities to do some things if you were there. But I think poll-wise, people are just going to want to buy some call spreads.
Mr. Uncle Mike, take it home, sir. What do you think our audience is voting for here? And if you have a vote, have at it.
I'm going to abstain on both accounts just due to the fact that the strategy block poll has to do with Facebook. So I'm going to vote present on this one and be like congressmen do when they don't want to take a stand on something. But I think with Facebook, there's a lot of different ways with which you can go from the standpoint of strategy. But here's the benefit of our option product in general. How would you like to have been a stockholder yesterday? Good gosh, that would be miserable. But for people like Andrew's clients that are in the chat room that either had just calls on it, and hopefully they manage risk well, which I'm sure they did. But even if you get totally wiped out of the call option, you still lost less than what you would have lost had you bought the equivalent amount of shares, most likely. And I think that's one of just the wonderful things about our beloved option product.
Speaking of our beloved option product and beloved Facebook and polls or Twitter polls, we have a poll up live now for what Uncle Mike should talk about today. And as he said, it is Facebook related. We asked you guys 4 choices: pros and cons of getting long Facebook, pros and cons of having a vertical on Facebook, a mix of choice 1 and 2. That's an interesting one. Or number 4, our silly option, history of WWF 84 to 88. Interesting period. The Warrior years and the Hogan years. Interesting stuff. Mr. Uncle Mike, what do you think is winning right now?
Well, I don't see how the history of the WWF from 1984 to 1988 can possibly lose. The fact that we can go in detail about the great feud between Hogan and Paul Orndorff. But unfortunately, I think it's probably not the winner at this stage. So I will guess number 3 is winning, a mix between number 1 and 2.
It's a close contest, sir. 40% saying pros and cons of getting along Facebook, 30% a mix of choice 1 and 2, 20% for a little WWF history, 10% for the verticals. We got about a little bit more time left, 10, 15 minutes, listeners. We're going to do a little bit different show today. I don't think we're going to have time for option block because there's so much earnings popping off. So we'll get into all this good stuff. Some other names you may be familiar with also popping off here after the bell. Let's get into it. Good old Amazon, ticker symbol AMZN. In case you don't know, you listen to the show, you probably know. They closed right around 18.08. Not a great day for them today. Listeners off nearly 3%. In their after hours, first off, they're pricing a little over $100, about 104, so a little bit shy of 6%, but close to it. In the after hours, they're getting some of that back. They were rally ho mode for a while. They were up quite a bit. They were up to 1881, so they were up about 70 odd handles. They have since retreated off those levels. They're up about 22 handles right now, a little over about 1.25%. Mr. Matt, you guys are cranking away at on the ORAT's earnings move front. Have you guys been cranking on Amazon, and what are some thoughts on those, as well as some of the other names we got popping off after the bell here? We got Chipotle, we got Starbucks, we had McDonald's for the open. Anything catching your eye out here, sir?
Yeah, Amazon. And so let me just explain the procedure a little bit, Mark, because I think it's important. I've seen some other people talking about, the straddle, what the straddle prices are telling that the move is going to be in, and it really depends on where that straddle is. I mean, so some of these stocks, of course, Amazon and these bigger stocks have weekly options and some expirations even even tomorrow. So that's relatively easy. You could just look at the straddle price. You don't have to do many gymnastics to get really the isolated price. But in some of these stocks, the straddle price that people are looking at may be, for example, the August, and where that still has 23 days or so. And if you have something like that, you have to take out what is the straddle after the announcement has happened. And so the way that you need to do that is you need to figure out, what is the probable fall in implied volatility? We have ways to do that. And then also, what's the distribution? So how do stocks move at earnings? I mean, I know that, when I was guessing at it before I did the research, it seemed like it might be kind of bimodal, like it might be way down or way up. It turns out that it's not. It's actually kind of a flattened normal distribution. So what we do is now that you have the distribution and where the volatility is, you could figure out what the premium is going to be left in the straddle after earnings, and then you can net that out. So it usually, whereas Amazon might have this massive straddle, you need to take a little bit out of it. So I wanted to get that across to people, and then what you could do is you could really do a good job at comparing the straddle prices to what the straddle prices came before, and now that you've normalized it. For example, we saw Facebook, the straddle price at this earnings was less than it was before. So in actuality, this has actually been a quiet earnings. Like, so the average historical over the past 2 years earnings prices have been have been higher than what we're seeing right now, and the moves actually have been a little bit greater. So the option market is, at least at the beginning few weeks here, the traders aren't doing that well, shall we say, Mark? Yeah, especially on this one. If you were trying to, shall we say, harvest the risk premium going into this move, that one kind of blew the doors off here to the downside. That kind of thing will leave a mark. Again, another reason why we typically counsel maybe you avoid trading through the event itself. Before and after, that's fine. You can be nuanced and trade the vol, all the fun things we talked about here doing on this show many times over the past number of years. Trading through the event itself, that's a little bit more of a coin flip, and sometimes those waters can be turbulent. And not much you can do about it because the options aren't open. You got to hedge with stock. It's a little bit more of a, shall we say, cumbersome process. Looking here as well, by the way, all these things are pretty much broken down
on our website. Go to the website. Go to the earnings move reports. Just click on ORATs. You'll see all the posts that Matt and his team have sent our way, breaking down not just these tickers, but tons, hundreds of them, with all kinds of stuff. So they obviously have what the straddle is, but also, as I think he kind of mentioned before, kind of the past expected move in the same quarter moves, past year moves, past actual moves, breaking it down in all kinds of interesting ways out here. And we got good old Intel coming off after the bell right now here as well. Again, looking at Matt's earnings moves report, they were pricing in right about $2.30. Stock closed today, $52 and change. And in the after hours, they're off about a little over 3%, about 3.3%, about $1.75 or so. The expected move, the average is about $2, $2.06, according to the earnings move report. So a little bit shy of that right now, but pretty close to it. So pretty much in line. Historical projected move, $1.70, which is pretty much exactly what we're seeing out here right now. Let's also move on to our old friend. Used to call it the stealth apple. Kind of doing it a disservice, I think, these days. Good old Chipotle. They're also popping off here today. They were pricing in, nearly $30, about 29.5. The stock closed right around 447, close to it out there today. And sure enough, in the after hours, they're moving about 27.25. So about a little over 6%. So again, that earnings move pretty close to in line with what we've been expecting out there from good old Stealth Apple, aka Chipotle. A little bit cheaper now than it used to be, but still not much stealth about Chipotle anymore. Also got good old Starbucks popping off after the bell today. They closed right around 51.5. They were pricing in here about $1.62. Again, according to the old earnings move reports, their historical projected move is about $1.32, and in the after hours, they're kind of unched. They're up about 35 cents, so about 0.75% or so far out there. Interesting stuff out there as well. A lot of names popping off in today's activity. I don't know, Matt, any of these other names, any of these other reports really jumping out? Or maybe it's different names that are popping off after the bell today that are really jumping out to you as you guys are cranking away literally thousands of tickers every day. Oh, Matt, there you go.
I didn't do the Andrew, almost did. No, it's hard to keep up, but you point out a good point that mostly these options traders do get that number very close to correct. So and that is true. After every quarter we do a summary, and it comes down to right around even a 0.1%. So they are getting these numbers right. It's actually quite uncanny when you see them reporting and you see the numbers coming right close to what the expectation was, Mark.
Mr. Rocklobster, I hear you laughed. Any thoughts on any of these earnings or anything driving your crazy here in the after hours?
While we're looking at some things, I think there are some longer vol plays. Probably Matt's product would be nice for helping identify this stuff easier, but some like S&P 500 stocks, and you can buy maybe SEP October volatility for pretty low prices, and you still have some earnings coming up for them. So I think those plays are out there if you were so interested in some of these things. And even just like kind of a non sequitur earnings, like AT&T was down like $1.70 or something like that, which is a pretty huge move for that stock on earnings. So there is some movement afoot in these dark earnings areas.
Yeah, and speaking of earnings afoot, I think maybe we got a few minutes. Maybe we could squeeze in. You guys like your Tesla mystery puts. Everyone was talking about them again this week. Maybe we can get into that and a little more. The really quick version of the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we break down the things that are weirder and wilder than earnings. Believe it or not, there are a few things, including our old friend, the name that giveth and taketh away, Tesla, closing today 306.35, off about 240, or not even 1%. So a pretty quiet day in all things Tesla land. And you guys know, as we are wont to do, we like to check out there on our favorite funky mystery puts. These bad boys have been on a tear of late. Yes, you're talking about the Jan 2019 50 puts. Our buddy, the Flow Master, Mr. Henry Schwartz, tweeting out earlier this week. He knows we love these. He loves them now, too, because we talk about them all the time. He's talking about how 7,000 of them were bought at one point, one day this week. And the total open interest at the 50 strike across all terms, talking puts, obviously, is over 140,000. So if you're wondering why you spend so much attention to these, why you spend so much time on them, it's because they're the ball game out here in Tesla land. You kind of can't look anywhere else for these things to really start popping off out here. And in terms of popping off, people chiming in. Still over $1 with a delta of 0.01. Insane. Too large to be a wing, says Option Master. That could be. We talked about this before, what our thoughts are and what's financing these. It's probably all that juicy CDS money out here. In terms of today, another day that they were just tearing it up. 2,248 to be precise. Lighting it up again today. Over 60,000, nearly 61,000 open on this strike now. It's just madness. They're $1.09 at $1.25, in case you're wondering how rich and how juicy these things are. The power put's also doing some paper today. 2,100, almost 2,200 going up there. So maybe some verticals going up. 30,000 open on that strike as well. Let's go out to our friends, the 20s and Jan 2020 50 puts. Kind of quiet out there, only 17. I don't know, Matt, maybe we need to have a second report for you, and it's just Tesla mystery put report. What do you think?
Yeah, I mean, I think these are interesting. I actually have been doing some tail hedge, and some of the testing that we're doing, and actually some of the pension funds are what they're looking at are, and not for a single stock like this, but they're looking at just index puts. But it reminds me of the Tesla puts, like way out, and but higher, 10-to-1 instead of just maybe a 1-to-1 protection. So, I think that there's something to buying these puts. They're not that expensive, but when they go down, the ball pops. I mean, obviously now they're expensive, but when Tesla goes down, there's such a Vega component that those things are just going to explode. So, there's a big argument. I mean, is it a real company? Elon Musk has said some pretty crazy stuff out there. So who knows where it's going to go? I read a tweet today. If Facebook could go down 20%, can Tesla go down 99%? So we'll see about that.
The VIX enthusiast wants to know, how are we looking at these puts? The markets are closed. It's a show. We look at today's activity. We don't just look at what's trading right now in the after hours. You're right. The markets are closed. There's no options trading on it. He's traded during the day, in case you're confused about the concept here. Speaking of things people are confused about, let's see what you guys are confused about, because it's getting about that time, listeners, for Uncle Mike to hold court on all things. So let's scroll down here and see if we can find. We'll tell you what, while I do that, we'll dive right on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, Uncle Mike, the results, you still have an hour left, but the results are final for our purposes here on the show, unless they change markedly in the next few seconds. What do you think is your winner chicken dinner today, sir?
I'll go with number 3, a combination of number 1 and 2.
A sane choice, a safe choice. Our audience says no. They say 42% say they want the pros and cons of getting long Facebook, sir. So I guess that's what you're talking about today. The history of WWF will have to wait for another day.
What percentage did the WWF get out of curiosity?
17%. But you know, it's funny. These numbers we have an hour left. These numbers could change dramatically. Of course, it won't impact us on the show, but they always move after the show, which is kind of funny. But you get that quick window, the start of the show, listeners. You got to vote. Otherwise, you don't get your voice heard until later. And if you see it, we see it later, and it's always fun, and we laugh at it. But it doesn't matter for the show. So, Mr. Uncle Mike, for our purposes, we're talking pros and cons of getting long Facebook. Have at it. You could be talking underlying, you could be talking long premium. I'm not sure what you were getting at there, so have at it. To each your own.
Let's talk about it. All right. Well, let's start talking about Facebook itself. Let's talk about just being long the underlying to start with. Now, first off, full disclosure, RCM, we do own Facebook in our strategic night portfolio, so it is a holding of it, and it is still a holding, at least as of today anyway. So, but with it, it's more of a longer-term holding. So I do want to mention that because we do have that in place. But let's go through some of the pros and cons of Facebook in and of itself. Facebook. Let's talk about being pro-long Facebook to start with. First pro about being long Facebook, it is a company that did change the world. I don't think there's anyone on the planet that would argue that, or at least a billion people would not argue that fact. Facebook's a company that has done very well through the years. There are over 1 billion Facebook users. Facebook's a company that a variety of people use, from very young people to even my mom uses Facebook. And so people that are 70 and older use Facebook, and I even another member of my family is over 80 and uses Facebook. So it's definitely a product that has a very wide range of use. Facebook's a product that before it existed, we did not have anything with social media. So the point is that Facebook is a very widely used company, and I really don't believe it's going to be going anywhere anytime soon. Now, you might say, well, what about this 20% drop today? That's something to be talked about. Well, good point. It is. But we're still in the pro section. Don't worry. We'll talk about the cons here in a second. Facebook is actually up over 10% off of its lows in March. Facebook's low was 149.02, I'm showing, on March 26th. So 4 months ago today, as a matter of fact, Facebook was significantly lower. And so that is one thing to keep in mind. The reason that I mention that is that when Facebook did hit its lows, this is back with when the news of the Cambridge Analytica data came out, or the data breach, whatever you want to call it. We actually had it gap down. We were around the mid 180s, and then it very quickly, over the course of just a few days, went down to the 149 level. Now, once it bottomed out, we had that. Once Mark Zuckerberg went to Congress and made a point to call everyone congressman, senator, congressman, yes, congressman, yes, senator, like pretty much anyone should in that situation. Since that point, Facebook has been on a royal tear. So let's say that let's go trough to peak with Facebook. We're at 149, and it had a rally of almost 50, not 15, 50%. From 149 to 218, not quite 50%, but pretty close over the course of 4 months. That's quite a bit. And so when you look at something that rallies that fast, that quickly, now granted, it was off of a stock that was down in value quite a bit, but when you actually have a stock that rallies nearly 50% over the course of 4 months, this isn't a penny stock, this is Facebook, this is a very big company, that's something to be said for the power of the stock. Now, of course, today it did drop by the 20% margin or the 19 or 18.96% margin with which it did. But keep in mind, I've always said this on the show in the past, stocks that have big rallies typically have big pullbacks, and this is a very big pullback, but we are still very far off the ultimate low in Facebook 3 months ago. Now, let's talk about the cons of being long Facebook. There's always pros and cons of everything. The first con is that for those of you that were long Facebook, the stock, going into yesterday, you got hit really, 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 really badly. And the RCM strategic night, it is a longer term holding, so With that being said, we'll manage risk and look at it accordingly. I'm not on the selection committee for which stocks we select. I'm the person in charge of the options on it. We don't have any open option positions in Facebook, nor did we going into the earnings announcement. We have it as a smaller position. But with that being said, some of the cons to it would be, what if this is just kind of the beginning of the end of it? What if this is one to where it is one step closer to having 1 foot in the grave, so to speak? This is a situation to where we did have the drop after the Cambridge Analytic news came out, but over the course of one day, we had actually the big gap down that we had back in March. On the 16th, we had the close at 185.09. And then on the 19th, we had it at 170 as a low. So that was not even 10%. This was just a 20% gap down. And this was a 20% gap down, not on a bad earnings announcement or just one bad screw up or anything like that. This is based on revenue for future use. So because of that might be a case to kind of stay away from it for a little while and not be anywhere near it. The other cons, of course, are that I'll just give you one example. Facebook, in the technology world, fads are something that are very popular, meaning that the life cycle for things to be cool doesn't quite last as long as it does in other sectors, such as financials. And I'll give you a direct quote from my nephew, who's in college right now. He even said, "Yep, kids don't use. My generation was the last generation to use Facebook," meaning that a lot of kids are not using it like they once did, just because of the fact that parents have figured it out. And if I was a kid, I don't know if I'd use Facebook because my mom and dad use Facebook. So is Facebook going to continue to have the popularity with which it did? Or is this something that's just going to go the way of ilovemypet.com or CMGI or some of the stocks of the tech boom back in the old days? So food for thought on whether you're looking to be long Facebook or being short Facebook or not even being in Facebook. And that is the strategy block for today, January 26th.
There you go, sir. Asking you shall receive, listeners. Now we got a few minutes to see if we can squeeze in a couple quick questions on a little Thursday episode of the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the program where you guys take the reins, questions, comments, insights. Matt, a lot of people hitting us up about where can we get these earnings move reports. Well, you can find them. Easiest place, of course, is theoptionsinsider.com. If you don't see it there on the homepage, you probably will. There's a bunch of them up there. You just hit refresh. Or if not, go into the search bar up there and type ORATS, O-R-A-T-S. And you'll come up their listing will come up all the reports they posted up there, and you could see them all for yourself. You guys also have the blog, right, Matt? Where can they go if they want to check out your blog?
Yeah, they could go to orats.com and do the drop down on blog. You could email me if you want them emailed to you, matt@orats.com. We'll add you to our email list. We also do signals, so we've tested signals on when are the best time to buy these, when are the best time to sell the straddles, and so you could look at some of our blogs for all that stuff. Mark, thanks.
There you go. And we asked you guys last week another flash poll, kind of a fun one. We said VXX was back in the erosion zone. A lot of people are waiting with bated breath for it to break the 30 handle. When do you think it's finally going to do it? Was it going to be last week? Spoiler alert, didn't happen. Is it going to be this week, so ending this Friday the 27th? Got one more day for that to happen. Is it next week, next Friday, ending the 3rd? Or never? I'm long vol. Our audience, Mr. Rock Lobster, was surprisingly split. 32% saying this week, the 27th, which I believe was your vote. 32% saying by next Friday, the 3rd of August, it's going to be down the 30 handle. 31% right on its heels saying, no way, never, I'm a long vol, it's never happening. And 5% saying last week. Mr. Rock Lobster, does that surprise you that our audience is so split? And I think you were what? You were this week, correct?
I was this week, so I've got I'm running out of time. But I mean, we're right on the bubble, right? We traded down to 30, I think 30.12. It ticked down there. So it's gotten some low ticks, but VIX won't break 12, and that future is hanging around $2 because we have the cycle's a little extra longer than normal. So it's not surprising me it's staying here, but without VIX going down. So it's what it is. It is what I would call it. It is a crappy time to really trade volatility. It's probably best just to ignore it right now.
Ignore it, or if you've got it on already, maybe you put it in the back burner in a separate account. So you don't have to watch it every day for a little bit here. Mr. Uncle Mike, you were talking last week or recently on Strategy about pairs trades. We got a question here from Alan T. He says, does it count as a calendar if it's on two different underlyings, or is that more of a pairs trade? Interesting definition question. Usually calendars are the same underlying, but if it's where do you put it, Mr. Uncle Mike, if it's a calendar on two separate underlying?
I would probably call that more of a pairs trade, unless, and I've never seen such a thing happen, but I've always dreamed of such a thing happen because I think it would be kind of cool if all of a sudden you found some type of arbitrage to where you could buy a bunch of SPX calls and then sell a bunch of SPY calls for a guaranteed profit of some sort because there's some type of mispricing in the options in some way and you can take advantage of it. No, I've never seen that in 15 years, but I've always wanted to. I thought it would be a lot of fun, but unless it's something like that, then if it's two separate underlyings, I think that would go the way of pairs trade.
Matt or Andrew, you guys going to agree, disagree? It sounds like a pairs trade to me. Walks like a duck, talks like a duck, but maybe you guys have different thoughts.
Pairs. It's a pair trade.
Yeah, it's a pair trade, but I mean, if something's got an extremely high correlation, you could call it a pair calendar.
Yeah, I'd agree with that.
Oh, have you coined a new term here on the show? Pairs calendar. Interesting. I'm not above exploring and exploiting such an idea here on the show. I like that. Pairs calendar. Maybe that's a new show episode. Talking pairs calendars. Now we'll really scare people. Interesting stuff. Meanwhile, we got to keep on rolling to our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Let's do a quick rundown here of all the names that were popping off after the bell, see how they are faring now. Let's start with Amazon. Excuse me. They were up about quite a bit earlier. They were up about 70 odd handles. Now they're up about a little bit shy of 50, 49. It's about 2.75%. So still bullish. Maybe that'll counteract some of the Facebook weight on the marketplace. We'll see a little bounce, maybe in the NASDAQ at least tomorrow. We shall see. Either way, looking pretty decent here in the after hours. Amazon, they keep saying they can't possibly make any more money. They have all these issues. They bought all these names. People hate Amazon. Go figure, go on and so forth. They were down on Prime Day. All these crazy things. And yet stock continues to rally. Starbucks, they were 51.45 in the after hours, and they're off pretty much. Actually, they're pretty much almost unched again in the after hours, unless this data is kind of funky. I don't know. It's showing it got as high as about 51.89. So pretty quiet. Low is about 51.11. About a 70-cent range. Nothing really crazy to write home about in here in S-Bucks right now. Intel. Off about 3.25% in the after hours, right around 50.5. So moving quite a bit to the downside there on Intel. And last but not least, as we're winding down here, is Chipotle. They were closing right on 447, and they're up about 22.25 handles, nearly 5% here in the after hours, 469 as we're winding down here. Matt, I know you guys have been cranking away on the earnings, so I'll give you pride of place here in the Around the Block. Anything catching your eye that you're really watching for the rest of this week or maybe into next week, some of the big names that are coming out?
Well, with Facebook, I'm looking at Twitter. Twitter's going to announce tomorrow before the open. I'm looking for a move there. So I think they're going to catch some Facebook volatility, and so that's what I'm really concentrating on, Mark.
That will be a good one, because if Facebook's having a hard time they're making money, but perhaps not quite at the pace they were expecting, one has to wonder about Twitter, who's always had challenges on that front. Mr. Rocklops, same question for you. What are you watching for the rest of the week into the weekend? Or if you're joining us on Volviews tomorrow, then at least till Volviews, where are you penning me again?
You know what? I missed the days of the Viceroy because we didn't talk any macro. We have supposedly a 4% GDP number coming out. So
wasn't it
I think
fantastic? Just avoiding all the macro. Didn't it just feel good?
Well, we've done it for a couple of years now, although I do miss the Viceroy. However, the man with many hats. So GDP, and again, Twitter is, Twitter's not exactly Facebook. It's more, just anybody with a pulse has to tweet something. So I think it's a slightly different business, but Twitter has been kind of on the comeback here for a long time. So I would like to see it continue going. And I'm also looking at just the chips in general. And I know off the cuff, but, if this trade war thing is starting, if the U.S. and Europe can get together, maybe the U.S. and China can get together, and things might improve a little there for something like FXI. So those are what was on my radar screen, sir.
There you go. Looking at now, Matt just tweeted out what they're looking at for Twitter, and it's priced in about $4.18 with the stock right around $44.22, so right around 10%. So we shall see. They're coming out they're before the open tomorrow, actually. So the 27th. So that'll be another name to watch. We'll see if that can add to the aftermarket exuberance or if it's dragging us right back down. We shall see. Last but not least, Mr. Uncle Mike, what are you watching the rest of the week into the weekend, sir?
Earnings, just as our other two guests had talked about. And also, let's not forget, we got non-farm coming up in 8 days. There's some macro for you, Andrew.
All right, I'm going to mute you now because you guys are talking macro, so you're out. That's the fun, the power of being in the big chair. Of course, that music, listeners, means we're all going to get muted soon. Show coming to an end here. But before we go, let's go back around the horn really quickly, see what everybody has cooking up. Let's start with our guest, Mr. Matt of ORAT's fame / infamy. Matt, we talked a lot about those earnings reports. Those are pretty cool. What else you guys have cooking over there in the land of ORATs?
Yeah, we're doing some back testing, so I like the pairs calendar. So I'm going to try that back test. One of the things that we could do is combine different back tests into one. So we're going to try that, and maybe we could talk about that next time, Mark.
You're gonna dread coming on because every time you come on, you have homework and you leave.
Work.
You have a new strategy to test. Yet our audience, they're full of ideas. So go figure. Check it out. Orats.com to learn more. Give them a follow on Twitter if you like all this data we're talking about. They're always tweeting it out. It's an easy one to remember. It's at Option Rats, RATS. So yeah, no, they're not looking at options for exterminating the rat problem in your area. Nope. If you want that, call somebody else. Give them a follow if you want some good data there in between shows. We're not talking about them here. And of course, you can find all the reports at theoptionsinsider.com, a little site I like to go to once or twice a day. Mr. Rocklops, same question for you. What's cooking in the land of the VIX negative zone?
VIX negative zone 6 is landing in this weekend, fixing broken trades on Sunday. Our Saturday class is going to be on a Sunday. So if you're interested, surf on over to optionpit.com/fix or grab our event tab.
I like that. That's good branding, having the Saturday class on the Sunday. That's good. That's not confusing at all.
It was an interesting choice, but I just take orders.
That's like having Saturday night's main event on Sunday. You just move the day because it's not part of the branding at all. What the heck? Mixing it up. Keep making sure they're paying attention. There you go. Yep. Check it out at optionpit.com. Go check out the Saturday night webinar this time on Sunday, just to see if you're paying attention. And last but not least, Mr. Uncle Mike, if I like all this stuff about Facebook getting long and pairs trades and everything else, I want to go to a wealth management firm who could speak to me in such terms. Where should I go? What should I do?
By all means, contact me. Feel free to visit my website at stcharleswealth.com or shoot me an email at mtosaw@stcharleswealth.com. And also, little known fact, Tuesday Night Titans, a WWF show back in the mid-'80s, did change to Friday night. So there was Tuesday Night Titans on Friday night on the USA Network, just to add to all of this night-changing events.
There you go. See, there is precedent then. So maybe Mr. Rock Lobster, he's not completely out of step. Well, we shall see if he becomes a Friday night, and then Saturday night's main event became a big thing, I think, too. So there's all sorts of branding. Check it out. stcharleswealth.com. Let him know if you like the Fox. I like the Fox. Let him know what you think. stcharleswealth.com. And on behalf of Uncle Mike and the Rock Lobster and Mr. Matt and the Orats team and indeed myself, I thank all of you out there for downloading, streaming, subscribing, all the fun stuff that you do, crazy questions, crazy ideas, calendar peers, all that good stuff. Keep it coming at us. We love to hear from you. We'll see you back here tomorrow. Remember, we did TWIFO already today, so we'll see you back here tomorrow for Volatility Views. It's normal time, noon Central, 1 p.m. Eastern. Otherwise, we'll see you back here on Monday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.